Let's take a look at this simple example of callable bonds that were issued by the MicroDrive company. Okay, now let me just go over the values here. The face value of the bond is $1,000 that you see on the screen where I have it highlighted, and that's pretty typical for bonds. The contract rate on the bonds was 10%, and in this example, we're assuming that the market rate on MicroDrive's bonds have currently fell from 10% to 5%. And as a result, the bonds are now trading on the market at a price of $14.94.93. And we're also assuming the bonds have a callable price built into the contract of $1,100, which means the company can call them early at any point, in which time any bondholders will receive $1,100. Okay, the total bonds when they were originally issued were for 10 years in length, and at this point in time there's 9 years left, and we're asked to solve the yield to call. And the way I'll do that is with Excel's rate feature. What I'm going to do is just copy in the answer and then explain. I'll copy in the formula, and then I'm going to explain how I got it. So I'll hit my formula function here, and we'll get a little pop-up screen, and then I'll show you where it all came from. Okay, you should be, let me put it right about here. Yeah, you can see most of it there. So the number of periods was 9 periods left. The payment amount was $100, and that was equal to B3 times B4. Let me slide that out of the way. So we take the $1,000 times the 10%. The present value of the bonds, I'll slide that down a little bit, was that $14.94.93 appearing in cell just to the left of my mouse, B6. Okay, the future value is the $1,100. That's the callable feature right there to the right of my mouse. And then the type I can leave blank. And what type stands for is it annuity due or a normal annuity? And normally we assume that the payments come at the end of the period, so we make it a normal annuity. There's the note there. You could put a 0 in there, but I tend to leave it blank. Either way is fine. And when we're done, Excel calculates a rate of 0.042. It's formatted at 4.21 here. We hit OK, and that's how we determine the yield to call. So the variables you would need to do this if you were using a calculator, you would use this as the interest rate. The present value would be the $14.94.93. The future value 1,000. Now, one other thing, I just want to call this up again. Remember that some of these numbers need to be presented as negative numbers. If we're investing in the bonds, we show the $14.94.93, the current price that we would have to spend out of pocket to get the bonds, is a negative, and then we show the interest payments and the money back at the end is the positive cash flow, and that's how both Excel and calculators will need to work to solve this one. Okay, and that's the callable bond example using MicroDrive's callable bonds. Thanks, everyone.